Good evening. Wall Street is rattled today, January 20th, 2026, as US stock markets brace for a sharp drop. The trigger? President Trump's surprise announcement of heavy tariffs on European goods, tied to his renewed push for the US to acquire Greenland from Denmark. Global markets, already shaky after last week's losses, are now on edge over fears of a trade war. Before the opening bell, Dow Jones futures plunged 750 points, S&P 500 futures dropped 1.6%, and Nasdaq 100 futures fell nearly 2%. Investors are spooked by the uncertainty. Tariffs could disrupt business, raise costs, and slow economic growth. The timing is especially tough. Markets were closed Monday for Martin Luther King Jr. Day, giving investors extra time to stew over the news. The previous week's modest losses now threaten to snowball. The core fear? Uncertainty. Tariffs make it hard for companies to plan, raising costs for importers and exporters alike. American firms worry about European retaliation, which could make US products pricier overseas. This kind of unpredictability often drives investors to sell stocks and seek safer assets. The world is watching. Is this just a negotiating tactic, or the start of a serious economic conflict? Wall Street is bracing for impact. To understand the market's anxiety, let's break down tariffs. A tariff is a tax on imported goods. Say, French wine coming into the US gets hit with an extra fee, making it more expensive for American buyers. Governments use tariffs to raise revenue, protect domestic industries, or, as now, to pressure other countries. The immediate effect? Higher prices for consumers and potential inflation. Tariffs can trigger retaliation. If the US taxes European cars, Europe might tax American products in return. This tit-for-tat is called a trade war, and it disrupts global business, leading to job losses and slower growth. President Trump's plan: start with a 10% tariff on European goods in February, possibly rising to 25% by July if there's no Greenland deal. He's even threatened a 200% tariff on French wine and champagne, essentially banning them. Such aggressive moves have investors fearing a full-blown trade war. The uncertainty is casting a long shadow over the markets. That's why Wall Street is so unsettled. At the heart of this crisis is President Trump's push to buy Greenland. Greenland, an autonomous territory of Denmark, is strategically located between the Arctic and Atlantic, vital for military and economic reasons. Trump argues it's essential for US national security, especially as Arctic shipping lanes open and global rivals like Russia and China expand their presence. The island hosts Thule Air Base, a key US military outpost, and is believed to hold vast reserves of rare earth minerals, crucial for tech and defense. Securing Greenland would give the US a major edge in resources and security. Trump is using tariff threats to force Denmark and Europe to the negotiating table, framing Greenland as a non-negotiable security issue. He's expected to press the case at the World Economic Forum in Davos this week. So far, Europe isn't budging. Europe's response has been swift and united. A resounding no. Leaders from Denmark, France, and Germany have condemned Trump's tactics, insisting Greenland's future isn't up for negotiation. The EU is preparing countermeasures, including steep retaliatory tariffs on $100 billion worth of US goods. Some nations want even tougher tools, like restricting US companies' access to European markets or limiting American banks' activities. The goal: deter future economic bullying, not just respond to this crisis. Europe's leaders see Trump's move as a dangerous break from international norms. While a trade war would hurt both sides, Europe is determined to stand firm. An emergency EU meeting this Thursday will set the tone for their response. The world is watching to see how far Europe will go. The stakes, not just trade, but the rules of global engagement. The showdown is just beginning. The US Supreme Court could upend everything. The justices are set to rule on whether President Trump can use emergency powers to impose these tariffs. The case hinges on the International Emergency Economic Powers Act, meant for true national emergencies, not territorial disputes. Critics say Trump is stretching the law to bypass Congress. If the court rules against him, his tariff threat could vanish overnight, calming markets and curbing presidential power. If the court sides with Trump, it sets a precedent for sweeping executive authority over trade. The decision will shape not just this crisis, but the balance of power in US trade policy for years. Wall Street is watching the court as closely as the White House. When markets panic, investors rush to safe havens, gold and government bonds. Gold prices have soared to record highs, reflecting deep anxiety about the future. Spot gold jumped over 1% to $4,524 an ounce. Gold futures surged even higher. Gold's appeal? It's a store of value, immune to political chaos. US Treasury bonds, another classic safe haven, are seeing mixed signals. Normally, heavy buying would push yields down, but today, yields are rising. Why? Investors fear tariffs will fuel inflation, eroding bond returns, so they demand higher yields. The bond market's reaction shows just how complex and uncertain this moment is. Some seek safety, others brace for inflation. The split signals deep confusion about what comes next. In times like these, even the safe bets aren't simple. The market's nerves are on full display. Amid the chaos, oil prices remain surprisingly steady. Brent crude holds at $64 a barrel, WTI at about 59. No wild swings like in stocks or gold. Why the calm? Global oil supplies are ample, and the US-Europe dispute isn't threatening production or shipping routes. Unlike a Middle East crisis, this trade spat doesn't directly endanger oil flows. But if the trade war escalates and slows economic growth, demand for oil could drop, pushing prices lower. For now, oil traders are in wait-and-see mode. The market is watching for signs of a real economic slowdown. If business activity falls, so will energy demand. Oil's stability may not last if the crisis deepens. For now, it's a rare pocket of calm in a stormy market. This crisis hits during a crucial moment. Corporate earnings season. Major US companies are reporting results, offering a snapshot of economic health. But the tariff threat clouds the outlook. Investors care less about last quarter and more about what CEOs say about the future. Companies with big European exposure are especially vulnerable. Any hint of caution in their forecasts could send stocks tumbling. Netflix, Johnson & Johnson, GE Aerospace, Intel and Procter & Gamble all report this week. Their global reach means their results will reveal how the trade dispute could ripple across industries. Executives face tough questions about contingency plans for a possible trade war. Their answers, or lack of them, will shape market confidence. The intersection of earnings and geopolitics has created a perfect storm for Wall Street. This isn't just a Wall Street story, it's about your wallet. Political decisions in Washington can ripple worldwide, affecting markets, jobs, and prices. Tariffs on French wine don't just hit France, they impact American importers, restaurants, and consumers. Retaliation from Europe could hurt US companies and workers. Global supply chains mean a disruption anywhere can cause problems everywhere. That's why markets react so strongly to trade war threats. They threaten the flow of the global economy. Even if you don't own stocks, your retirement savings and cost of living are at risk. A prolonged dispute could mean higher prices, fewer jobs, and weaker savings. In today's world, global headlines can hit home fast.